What banning HFT means is that firstly, it will be legally punishable for companies who continue to do HFT. Secondly, government auditors will do periodic checks to ensure that such a system will not continue. And thirdly, scrutinizing financial reports and potential gaps that could be exploited. This is what HFT means. Banning HFT means. The trading market is an extremely competitive market. You have people who try to fight tooth and nail, spend their entire lives, their education, and spend hundreds of thousands of dollars to figure out how to win against the market. You have people and companies who have billions and billions of dollars that shift the market to their own benefit, right? And multiple companies, multiple individuals pull the markets in multiple directions, which causes this web of complexity that people are trying to predict and try to win in. It's a highly competitive market, and it's oftentimes, especially for most people, a negative sum game. The reason why individuals usually have a negative sum game is, well, firstly, empirically, there is a lot of people losing a lot of money in the stock market because of three reasons. Firstly, the lack of strategy. They don't know what to do. They just see that it seems interesting and then they go for it. These are usually the beginners, right? The ones that don't have a lot of experience, but try to make money somehow. Second, the lack of knowledge. Well, these are the people who have gone up a level. They got somewhat strategy, but they don't have the specific relevant domain knowledge that allows them to see things at a higher level, right? And thirdly, it's a lack of funds, and this is the biggest one, right? It's the fact that because they don't have enough money to move the market, it's because they don't have the money to make a drop in the vast ocean, they end up being swept up by the currents and the currents being the large companies that have D funds, have billions and billions of dollars that ordinary individuals do not. And even if you are ordinary individuals who have billions and billions of dollars, you probably have a company, or at least you have a lot of power to control many companies. Another point for the reasons why individuals often lose money or often don't make money in the stock market is because of conflicting advice from multiple so-called gurus who say that they have succeeded in the market, right? This causes a lot of confusion, and this causes a lot of mess in the stock market, especially for the individuals. So the stock market is already against most individuals, right? It's the fact that they don't have the funds, don't have the knowledge, don't have the strategy. Well, now let's look at companies. Companies already have the advantage. Why? Because of the three factors I just said. First, they have amazing strategy. Why? They hire they have the best people figure out what's the game plan, right? They set up a whole company of strong, like-minded individuals who have extreme high amounts of knowledge, right, to be able to create a strategy that allows them to make money every year. So they both have strategy and knowledge. They hire the greatest minds in not only finance but in other tech industries, so that they're able to combine multiple domains into the finance industry to be able to make more money. Third, they have funds. They have so much funds. They have the most funds in the world, and they are able to move the markets. They are the waves in the sea. They are the ones that control the markets, and they already have such a huge advantage compared to the individual. So, I'll first like to talk about fairness. I think reasonable fairness is important in the stock market, right? The fairness as a moral right has progressed from evolution as we had to treat each other with dignity and respect. This is because it allows us to have an increased level of collaboration and ultimately the survival and thriving of our species. Like, you just imagine stereotypically the anger you feel when your parent has bias over your sibling, right? That unfairness, that moral feel of it is very strong, right? And therefore, we have developed fairness as it is important because it allows us to survive and thrive as a species which progressed from evolution. So, why should fairness be incorporated into the stock market in particular? Well, firstly, and there are 4 points. The point of the stock market is to create a place for individuals and companies to invest in equity in other companies. This allows these companies to have more financial power and capital to be able to do more things, and hopefully hopefully this financial power allows these companies to grow, which allows investors to earn some money. For this to work, for this whole system to work, right? Fairness, a certain level of fairness has to be involved. That's the reason why insider trading is banned. Market manipulation is charged. It's chargeable. It's a chargeable offense. Why? Because governments need to enforce certain guardrails so that the common man doesn't get affected and doesn't lose his life savings because the people up at the top are manipulating the markets to their favor. This is why insider trading is a big no-no and market manipulations are a big no-no. We need a certain level of fairness so that all of us from the top and down can collaborate so that the entire species evolves and thrives to a better level of humanity, right? This is why we need guardrails. What happens if these guardrails are not enforced? What happens if, for example, we let loose on insider trading and market manipulation? Well, in this particular case, multiple companies will fight each other using these algorithms. They have the funds. They are able to invest in these algorithms, and multiple companies will have their own nuance to these algorithms. So tons of companies, just to gain a millisecond advantage, would create better and better algorithms. What happens? This causes the competitiveness of the market to spiral even out of control. This would cause the baseline of qualification to invest in the stock market to be trading at milliseconds worth of time, which is obviously impossible for the common man, right? The common man wouldn't be able to invest in these algorithms. The common man wouldn't be able to have this expertise, knowledge, and funds. The common man would just lose money. And especially since HFT gives so much power to the companies, it skews the power even more one-sided to the companies, right? The common man's 401ks, the common man's CPF, the common man's life savings would be at the fingertips of these powerful individuals with the power to change the market as they see fit. This will also cause a long-term detriment to companies because now less people want to invest, and when less people want to invest, now companies will have less money for financing and would therefore have less money to grow, and therefore it will also be bad for companies in the long run. Our team believes that, like in life, we do not have ultimate fairness. We don't. However, just like slavery, we as a species has progressed to becoming more and more fair to each other, irrespective of race, color, or religion. Therefore, as a species, we should strive to head towards that direction of more fairness for the common man against these large companies, and notably these top executives. We need to skew the power balance back so that these people don't have such a large sway of power to the entire trading market. This is why we are so proud to propose